Bring our next guest now, David Kudla, Mainstay Capital Management founder, the CEO and chief investment strategist, and a former auto engineer. So certainly a lot of experience in the auto industry. He's on the line from us from Michigan here this morning. David, thank you so much for joining us. First off, just talking about what Craig mentioned, when it comes to zero tariffs on autos, is this something that you're encouraged by? How much of a relief is this news that we got from D.C.?
Good morning, Yvonne. It's encouraging, but probably undoable. I think it's very encouraging, the news we got today with the meeting between President Trump and Jean-Claude Juncker. It is they've agreed to talk, let's say, for now, and we'll see where this goes. But this has been President Trump's operating style, is to set a stake in the ground and say, I'm going to do this unless we have a serious discussion. And they had that today, and at least have some things they're moving forward on. So it is encouraging, at least on trade between the U.S. and EU.
How surprised were you by these cuts to full-year guidance from the likes of GM and Ford? I mean, we've seen kind of this, we mentioned, perfect storm of higher interest rates, higher commodity prices, and all these fluctuations in currencies and whatnot. Can you still buy on the weakness?
I don't think so. I think we're in wait-and-see mode on most of the autos because of the uncertainty over where the tariffs on commodities go. What's put the biggest dent in the outlook for this year is just the steel and aluminum tariffs alone, impacting GM by half $500 million and Ford by $600 million. Significant impact. And if there are further tariffs that do come on autos, you have problems there again. So there's a lot of uncertainty in the auto space right now, and we would be on hold for that reason.
Who stands to lose out more? I mean, you talk about where we go in NAFTA talks. That's going to be a big question mark as well. But and a lot of these big automakers like GM, Ford, and Fiat, they all build a lot of cars in Canada. Could U.S. car companies actually be the worst hit?
I don't think they'll be the worst hit. I think that in terms of who loses, everyone loses. A lot of the car companies lose as car prices across the board go higher. The amount of imported content in U.S. vehicles will impact U.S. sales. There are vehicles, a great deal of Canadian imported or exported autos go right to the U.S. So if you look at the trade balance between the U.S. and the rest of the world, if we're talking about the EU, if we're talking about Asia, Canada, Mexico, really the U.S. is in the driver's seat here. I don't want to say that a trade war is winnable, but other countries, other regions have more to lose by a trade war or by any escalation of tariffs or not working towards this free trade, fair and balanced trade that President Trump is working toward.
David, I'm curious whether this that we're talking about is sort of a new normal in terms of the weight we're seeing over the auto industry. I mean, our correspondent just now was saying that for General Motors, at least, that's something to do with the tariffs. But with Ford, it's more within the company itself.
Yeah, there is hi, Remy. There is two things that are going on in the auto industry. What we're talking about now, what we call the legacy business, that is the autos being made now, the emphasis on trucks and SUVs, and in the future, the automotive industry, where we're looking at autonomous and flexible mobility, that we see leadership out of GM. We see Ford trying to catch up, as well as a major restructuring they just announced in the current business model. So there's a lot of dynamics in play right now.
David, thank you. David Kudla there, Mainstay Capital Management founder, CEO, and chief investment strategist, joining us on the phone.